Hi guys, this is Erica from Gokche Capital. Now before I begin, be sure to click subscribe and turn on the notification bell. Daniel Barsky just completed construction on a home in Princeton, New Jersey. But this home is no ordinary single-family residence. It comes with a second unit. We'll learn more about Princeton's experiment with accessory dwelling units at the end of this video. But first, if you are thinking of building your own home, you will likely need to take out a construction loan to do so. And in today's video, we have the top things you should know. Number 1. What is a home construction loan? A home construction loan is a short-term, high-interest loan that provides the funds necessary to build a residential property. These loans are often around 1 year in duration, and during this year, the property must be built and a certificate of occupancy issued. Number 2. What does a home construction loan cover? The details may vary from lender to lender, but a home construction loan usually covers the following: the cost of the land, contractor labor, building materials, building permits, other soft costs such as lawyer fees, surveys, title, and insurance, and a contingency. Number 3. What are some things you should know about home construction loans before you take one out? The most important thing to understand is that construction loan rates are often higher than traditional mortgage rates. Because construction loans are considered more risky to lenders, they also come with large down payment requirements. In a similar vein, a high credit score will be required, and so will a low debt-to-income ratio. Construction loans also operate on a shorter timeline as they're dependent on the completion of the project. Thus, as the borrower, you'll need to provide the lender with a construction timeline or schedule, detailed plans, and a realistic budget. The other important thing to understand is that unlike personal or mortgage loans in which there's a lump sum payment, the lender pays out money in stages as work on the new home progresses. Draws tend to occur when a major milestone is hit, such as when the foundation is laid. And before each loan disbursement, the lender will have an inspector check the home to ensure that all the work billed for has been completed according to the plans. Finally, once the home is built, the construction loan becomes due. Some loans convert to a traditional mortgage at this point, but in other circumstances, you will need to take out a separate loan to pay off your construction loan. Number 4. What are the different kinds of home construction loans? The first is a construction to permanent loan. Some construction loans convert to a permanent mortgage at the end of the construction period. These are also known as single close loans. The advantage here is that you only go through one closing, which means you only pay for one set of closing costs. Having said this, there may be circumstances in which you decide to take out a construction-only loan. These loans are just for the construction period, and you will either need to pay off the loan yourself at the end of construction or take out a second traditional long-term mortgage to pay off the loan. Number 5. What factors should you consider with home construction loans? The biggest is the timeline. At the beginning of the project, sit down with your contractor and discuss timing. You'll want to be aware of whether your project can face significant timeline issues before you move forward. You don't want to default on your construction loan due to scheduling delays. Another important factor is complexity. Home construction loans are more complex than a typical mortgage, so think about whether you are prepared to handle all of this complexity. And finally, keep in mind that your lender will require a prepaid homeowner's insurance policy that includes builder's risk coverage. This is an additional cost to you, but will help protect you during the construction process against various risks. Number 6. What are the steps to getting a home construction loan? The very first step is to find a licensed builder. A lender will want to vet the builder you're working with to ensure that they have the required expertise to complete the home. If you don't know any builders at the moment, a good resource is the National Association of Home Builders Directory of local home builders associations. After you have your builder, you'll want to get your documents together. Such documents should include a cost breakdown, a schedule, and detailed plans. As with a traditional mortgage, you'll want to get pre-approved for a home construction loan. This is an important step to avoid paying for plans from an architect or drawing up blueprints for a home that you're not able to afford. Once you're pre-approved, you can go ahead and complete all of these documents and finalize the approval process for the loan. But now that we've covered the basics of home construction loans, let's return to Daniel Barsky's experimental house. Barsky's company, RB Homes, along with architect Marina Rubina, developed Princeton's first new residential construction project with an accessory dwelling unit. Thanks to Barsky and Rubina, a 0.19-acre single-family lot now holds 2 dwellings, a 2,300 square foot 4-bedroom home and a 1,400 square foot 2-bedroom unit. What's more, each of these homes was sold separately thanks to Princeton's new accessory dwelling unit ordinance. Rubina had long advocated for just such an ordinance in her work with the Princeton Progressive Action Group. Like many activists, Rubina believes ADUs, or accessory dwelling units, are an important tool in combating high housing costs because they allow the construction of additional units, which may also be smaller and more affordable than other homes in the area. For instance, Barsky's 2-bedroom ADU sold for $849,000. While this is certainly not what most of us would consider affordable, it is less than the median home price in the area of $1 million. And since passing the ordinance, Rubina has also constructed a duplex with a ground floor 1-bedroom unit that sold for $427,000. Meanwhile, more and more homeowners around the country are taking advantage of similar laws to build rental units that will serve as an additional income source. However, despite all the hype, ADUs are still rare at the national level. For it is not only zoning that serves as a barrier to these structures, but funding. Home builders and buyers need financing, after all. Fortunately, Fannie Mae recently started offering home renovation loans for ADUs, as well as refinancing options that may pay off construction loans used to finance accessory dwelling units. Hopefully, as money flows in, more of these useful little units will crop up around the country. And perhaps, when you construct your own home, you too can add an ADU. But what do you think? Do you have any stories about constructing a home or unusual dwelling type? Let us know in the comments. Did you like this video? You're going to love our Gokce Land Due Diligence program. We'll make you a land due diligence expert in just 7 days. Check it out at gokcecapital.com/glad. And while you're at our website, don't forget to explore our $1 down listings at gokcecapital.com/listings. Finally, don't hesitate to reach out. You can email, call, or text, and we will respond as soon as possible. So thank you for listening, and more to come.